This is a live chart of the S&P 500 right now. Okay, the SPY. I could show you the futures charts, the same exact thing. I was actually hoping that I would be here about half an hour ago because I would have shown you that it was about to hit its profit target. We'll come back to this, but I just want you to see this morning when the market opened 9:30 Eastern. If you look at the bottom right there, it says 9:30 Eastern. That's New York time. We got a buy signal, and this green dotted line is the profit target. So this same exact signal came in the NASDAQ 100. It reached it before the futures. It all like this is a live chart. That's I was hoping I would up here half an hour early so I could show it to you. All good. It's a live chart, so obviously I can't make this up. This is what we call momentum, and I'll come back to this, but let's just get right into it. So a couple things before we get started. First of all, as Jeanette said, I really think this coming year, 2025, is going to be a trader's market, and I want to quickly mention to you why I think that. So we're actually already in a trader's market, but I think what we're about to see starting next year is going to be something that will catch a lot of people by surprise, because I think a lot of people have forgotten or maybe have never learned what an actual trader's market is. So if you look at the chart that I'm about to show you here on the next one of the S&P 500, we can go all the way back to really 2010, 2009, the end of the GFC, the Great Financial Crisis. And if we're a bit more sort of conservative about it, we go back to 2013, where we've been in this essentially secular bull market. Now, a secular bull market will come with cyclical bull market and bear markets. But I think we're about to see the end of this linear move. Notice that I'm not calling for a bear market. I'm not calling for the market to crash. Those are low probability calls. I'm simply saying that I think this linear move is about to be over. So if you look at this chart of the S&P, I know it's a little bit hazy, but it shows exactly what I want to show. The end of the secular bear market was in 2013. That's when we started breaking out of a 10-year sideways move. No, I think it was 10 years almost. And then we basically moved into a secular bull market. Now, year to date, the S&P is up 25, whatever, something percent, maybe a bit more. Year over year, the S&P is up something like 35%. In fact, I can show you this quickly. It's for perspective, and I think it's important to be aware of this. Here, let me share this with you here. I'm going to quickly bring it over. It takes a second to load because something seems to be slow here. But you'll see in a second that the S&P over the past 12 months is up 33%. That's neither normal, nor has that happened a lot before. Here it is. Share it with you. Here we go. Bring it over. So these are what we call, parabolic moves. Again, I'm not calling for the market to crash. Please don't get me wrong, but I do not think this is a sustainable path forward. And that's also exactly why I think we need to brace ourselves for a little bit more volatility. So you can see year over year, up 34%. If I would have drawn this chart literally just 2 weeks ago, we were up almost 40% year over year. That's not normal. It's not sustainable, and it's likely going to end, I would call, at some point, maybe in the second quarter of next year. And honestly, it could happen sooner, but that's kind of what I'm thinking right now. So why does this matter, and why is this important? It's important because when we look at the activities of what most self-directed traders, and I'm assuming lots of you guys would fall into this category, are doing, is they've essentially for the past 10, 15 years been just blindly buying the dip. And that's not to me mean disrespectful, but that's not actually trading. I got news for you. Blindly buying the dip because something's down 5%, like an index or a stock is down 10, 15%, and then buying that's not trading, my friends. That is simply, at very best, if it's done with a calculated fashion, it's trend following, and that's a very powerful strategy. But for most people, that's essentially been just gambling, hoping that things go back up. I think that's about to end. And if you measure the move from the previous rally, I think from the year 2020, so COVID low for the following 2 years or so, that move exactly measures the rally from late 22 or I think October 22 into where we are right now. So that's literally just drawing a simple line and copying it. So I think that's about to be over. So, well, of course, the question is what to do. So what I'm going to show you guys here right now here today is how I think we're in a trader's market, but more specifically, how I want to take advantage of this. I just showed it to you before, like what I'm doing, but I want to go into much more detail so you can see that you can do this too. And I have a very simple tool, a very powerful but very simple to use tool that I would like to give all you guys access to. This is yours truly. I'm sitting at my desk. It's a bit later in the day here for me today. I'm in Europe right now, but over the course of my career, I've learned to respect when markets change, whether that is markets go from trend following to momentum markets or from volatility markets to something else. And I think we're about to see that. So quickly, risk disclaimer. I know we all have to bring these, but it is important. You know, trading investing does carry a lot of risk. So please make sure that you put adequate time into this. Make sure you learn it. Make sure you never trade or invest with more money than you can afford to lose. And anything I talk about here today is purely educational. None of this stuff is meant to be advice in any shape or form. So we're here post-election. In fact, we're here now post-Thanksgiving on Black Friday today. But if you look at the post-election reaction in 2016, you saw the S&P 500, the SPY blast higher. Same thing happened in 2020, and we really didn't know what to expect. At least, you know, I'm sure someone on Twitter knew it exactly, or your neighbor's dog probably really knew. But for those of us that are realists, we didn't know what was going to happen. So I was quite open to any opportunities. And sure enough, we got a new momentum buy signal on the day of the election results, and the S&P 500 since then has been higher. In fact, the SPY, as I showed you a minute ago, is actually went above 603. The SPY just a few minutes ago, and now on that intraday signal I got as well. So this trend momentum signal, I should say, remains intact. And the question, of course, is what's next? I want to quickly talk about indicators and tools. For the most part, when it comes to traders, indicators and tools, lots of things tend to be somewhat lagging in terms of accuracy or in terms of timing. And so just like we need a tool when we have a trend following market, we need a tool when we go into momentum markets. And I really think we are in a momentum market, and I'll show you what that means. So if you're concerned a little bit as to what might be ahead for the markets next year, again, I'm not calling for a crash. That's absolutely not what I'm calling for. But I think we're going to have a momentum market. And momentum markets are traders markets. And so for a lot of you guys here that are probably, again, considering yourself, at least to some degree, self-directed traders, maybe self-directed investors, I think it's important to understand what momentum is and why, if you are a self-directed trader, particularly if you use leverage, and even if you don't, what you are really looking for is momentum. Again, we've had this raging trend following market where people just blindly bought the dips because it's worked, and it has worked, right? So that's the great news. But I think that type of market environment is about to be over. So what to do? Well, let's understand what momentum actually is before we go into it. So momentum, as defined by physics, and I'm sure any of you here that have a background in physics would probably know this, certainly know better than I do. But just mathematically, it's essentially P equals M times V. So momentum equals mass times velocity. Now that we've got the geeky part out of the way, my definition when it comes to momentum as far as the markets are concerned is the following. We got a nice little blue car here on the chart or on the screen, and essentially the way I envision momentum in the markets is when, let's say, we're driving along, we're going 45 miles an hour on just a regular sort of road, and then we turn onto the highway and we accelerate from that 45 miles an hour up to, let's say, 75 miles an hour, and that move, that delta that we get from driving 45 miles an hour and speeding up to 75 is exactly what we talk about, what I refer to when I mean momentum. And that's really where we as traders want to shine. That's what we want to take advantage of. That's where, if any of you guys use options, I don't know if does anyone use options here, or maybe even futures, right? Or even if it's just stocks, it doesn't really matter. It just has to be It just has to be a momentum trade, and that's what you want to take advantage of. So again, momentum, by my definition, is the rate of change. It's the rate of acceleration in a security's price, potentially also volume, but here we're focusing on price. And that's really what we're talking about. Now, what's really crucial about momentum, and I think this is something that is crucial to understand for the markets this coming year, is that momentum is fleeting. It's temporary. It doesn't actually last for a very long period of time. It can last for days and weeks, of course, but it's fleeting, but it's very strong, right? And that's exactly where we as traders want to be taken advantage of. Momentum is not a constant. It comes and it goes. So final chart before we go into the actual current market here, we have the markets are going to be open here for another 30 minutes here today for the month of November. So I still have an opportunity to show you this stuff live here if we go quick enough. But this is a chart of Amazon. This represents a strong trend from the lower left to the upper right. That's the long, big green arrow. And you can see this smaller, darker arrow there. That's where momentum came back into that stock. You can notice that stock went up, it then consolidated, and finally, boom, it started blasting higher again. What we're focusing on when it comes to momentum is this point in time right there, because that is where we get the most bang for our buck. That's where options can double, triple, 10x. That's where a futures trade can go crazy profitable. That's where just buying a stock, right, or an ETF can become really profitable very quickly. And that's what I refer to when we say we're going to have a trader's market. Again, blindly buying dips, just because the S&P is down 5%, which is what's worked for the most part for the past 10, 15 years, that is not a trader strategy. That's not trading. That is at best trend following, but for most part, essentially pray and hope that it's going to go back up, because guess what? Things always go up. Of course, that's not correct either, but that's going to change, and it's going to provide a ton of opportunity. So let's get into it. All right. So the challenge that we see traditionally with momentum indicators, be that stochastics or something else that comes right out of charting platforms, is that typically the signals tend to be somewhat late. The exits tend to be late, and that can lead to a lot of false signals and frustrating losses. And so what I think is important is we have something that adapts very quickly to sudden market changes. And so when we started looking at this kind of stuff a long time ago, when I was still working at JP Morgan, what we were looking at, we were trying to find out, one of the things we're trying to find out is how can we use something that detects fresh momentum, I'm going to say in real time, or maybe better said, as quickly as possible, as quickly as reasonably possible. And so we have a very specific set of parameters that finds this momentum. It's very timely, and it reduces the false positives, meaning false signals. So we use something called the TST momentum indicator. And what the TST momentum indicator does, it essentially analyzes a bunch of stuff like price and volume to detect momentum. And then it generates us buy and sell signals based on this predefined criteria or predetermined criteria. So very, very simple in terms of what we need to do to use it properly, but extremely accurate if used properly. So let's go through this and let me show you exactly how it works. It adapts to different markets. It adapts to stocks, ETFs, obviously options and derivatives, even Bitcoin. I can show you that today for those of you guys that might be looking at something like that. So let me get right into it so we stay on time. And again, this is about being something that's actionable and right here, right now. So let me just quickly go back to, we're going to talk more about the intraday signals in a minute, but I just want you to see, again, this is a live ticking chart. I'm not making this up. This is the SPY right here, right now on a 5-minute chart. So we got this morning at 9:30 Eastern time. You can see it right there. We got a green arrow, and that green arrow, you can see it right there and pointing to it with a bigger arrow, just so you guys can see it right there. That is a buy signal. Well, when that buy signal prints, what it's going to give me is a fresh signal that there is momentum in this trade, in this market. Whatever this might be, this could be the S&P, which is what this is. It could be the futures market. This could be a stock. It doesn't matter what it is. It's going to give us momentum, and it's going to automatically give us a profit target right there. We have profit targets based on whether it's an intraday chart or a daily chart. We'll show you that more in a minute. And you can see it ended up reaching its profit target here about 15, 20 minutes ago. And then we have a trailing stop as well, which is the red dotted lines. And again, I will explain this more in a minute. So this is a live chart of exactly what this looks like. What I thought I would do is I would like to give you the opportunity to type in some ticker symbols that you would like to look at. I'm going to start off with one, but I would like to make this interactive. So if you guys have a stock you want me to look at, please type it in. And then we'll go look at it and see if there's a signal. And so I can prove to you that this works. I don't want to show you hypothetical stuff. I'm hoping to show you something like right now here. Like that's why I'm trying to show you this chart right now here live. So if you have any stocks you want to look at or ETFs, whatever you want to look at, please type it in. I'm going to start off with one of them that I prepared here for you, and that's PLTR. It's a ticker symbol of a company called Palantir Technologies. Some of you guys might have heard of it. Maybe you haven't. It doesn't really matter. I'm just trying to show it to you here because I know it's a stock that a lot of people follow because it's one of those stocks that traders like to focus on. So I'm just going to show it to you here right now. So let's just go back a few months and see what happened. So let me just see and kind of do the math. So we had a momentum buy signal in June, and that momentum buy signal, it very quickly reached what we call a free trade. So what we want to do, our number one goal when we use this indicator is we want to get to a free trade target. A free trade, we do that because we want to take half the trade off, because once we're in that free trade, we can basically no longer lose money. And so it reached that target very quickly, and then the rest of the trade ended up closing out or stopping out for a gain of 16%. So remember that number, 16%. Then we had a sell or short signal also reached that free trade target very quickly, and then got stopped out of the rest of it for a loss of about 7%. So that's about a scratch trade because it made 7, lost 7, so a scratch trade. Okay, so 17 plus 0 is 17 or 16 and a half, whatever. Then we got a new buy signal. Again, it reaches the free profit target very quickly, and then this trade, it remains valid, by the way. So far, the stock is up 127%. This is what's called momentum, right? As a trader, less so as an investor, but as a trader, I want to be in stuff that is momentum driven, like a stock like this. So 17% plus this latest signal we got on the 8th of August. It remains intact. This trade has not stopped out. It's up 130%. So 130 plus 17, even I can do that math, that's about 147%. All right? Does that make sense? So that's about 140%. So that's just one stock that I wanted to prepare. Now, let's go into some of the tickers you guys are asking for. And just so you know, I have a different screen resolution on my other screen, so I have to keep going back and forth and drag this back and forth. It's a bit of a pain, but I'm doing this so that you can see this work. Let's actually, you know what? That's a good point. Let's go back to the S&P 500, and let's look at the S&P on the daily chart. This is a daily chart now, and what I'd like to do, because I think someone's asking this question, if I understand it correct. Show me the signals in the S&P on the daily chart, I think is the question. Yeah. So let's look at this and let's see if all we did on the SPY is just use momentum. If all we did is use momentum for the past 12 months, let's see if this would have made money. That's all, just momentum. All right. So we had a first signal right there. That's a buy signal. Again, it reaches its free trade target very quickly. And then it gets stopped out for a gain of 17%. So remember that number, that's 17%, 17%. All right, that's this entire move. So all we did is we got a buy signal in November of last year. It stopped out in April. So it just remained, it said stay long momentum. That's a long time for the S&P to be long momentum, right? But it can happen. We got a short signal, it reaches its free profit target or free trade target, then gets stopped out for the rest. That's a scratch trade. So here, no gain nor loss is scratch trade. Next trade, we get a buy signal right there, this one right there. So I'm going to get rid of this. We get a buy signal. It again reaches its free initial profit target, and get stopped out for a gain of 6%. So let's write that down, 6%. All right. Then we got a sell or short signal. That one had actually went way beyond its initial profit target. So that was up 6%, get stopped out for the rest. I'm gonna call it a scratch trade. It probably made some money, but just let's just be honest with ourselves and be super conservative. A scratch trade. Then we got a buy signal, reaches its free trade target, gets stopped out for the rest. This one definitely made money, but again, let's call it a scratch trade just to be super conservative. And then this last one here was a losing trade. So let's use this one. This was a loss of 2%. So minus 2.5% of a loss. Oops. Of a loss. Then we had a buy signal right there. That one gets stopped out for a loss, a gain of 3.6%. So that's 3.6% or 6.5, I think. And then we had a sell signal. Now this sell signal is not one we took because it was right before the election. So I think everyone can probably understand that. So this is not a valid signal. It was right before the election, not something we would take. And then we got a buy signal right after the election. So far, the S&P is up 2.2%. So 2.2. So there you go. All right. So now if we add up all these trades, let's call it 2.2 plus 2.5. That's let's call it 0, a little bit minus 0.3 plus this 3.6. So that's let's call it up 1, just to be very conservative. Up 7 plus 17, so up 24%. And all we did is 1, 2, 3, 4, 5, 7, 8 trades. 8 trades in 12 months. Actually, it's almost 13 months, and up 24%. That's all we did, right? So you think about what that means. Why would I use much else? Because momentum drives these markets. What about then? What about Nvidia? Sure, let's look at Nvidia. Let's say I did the same exercise in Nvidia. I got a buy signal right there. It's the past 12 months. If all I did is use momentum, buy signal again reaches the profit target, the free trade target very quickly. Ultimately gets stopped out for a gain of 87%. So this is 87%. Oh, let me write that in. 87%. So that's 87% of that move. Then we had a sell signal, reaches profit, the free trade target gets stopped out, so 0. Then we got a buy signal, gets stopped out for a gain of 36%. So that's 36%. All I'm doing is going with momentum. That's the only thing I'm trying to do here. Yeah, we'll look at MSTR, guys, in just a minute. I promise you, we'll look at it. Then we had a sell or short signal. That one made money for sure, and then it gets stopped out on actually it hardly gets stopped out. Let's do the math. So free trade target reach, it gets stopped out for a gain of actually -2. So this was a scratch trade as well. This was a scratch trade, and then the latest trade was a buy signal that got stopped out for a gain of 14%. 14%. And then now we have a new sell signal. We got a sell signal, a short signal, a couple days ago. And so far, it's more or less a scratch. I mean, we're looking at Black Friday day, Thanksgiving week. So 87 plus 36 plus 14. What is that? That's 50 plus 87. So north of 100% of gains, just having done 1, 2, 3, 4, 5, 6, 7 trades. Well, in the last one here, it is not. But 7 trades, right? And up more than 100%. Do you think having done 7 trades and being up 100% in Nvidia is worth your time? Would that be more profitable than spending so much time looking at all the news, doing this and that, right? It's all we're doing is momentum. So let's continue. Let's look at MSTR, okay? So MSTR, someone's asking about MSTR, so let's just pull up MSTR. Who is asking for MSTR? This is empty field, okay, no name, all right? You guys want to put in your name so we can be a bit interactive here. But let's look at MSTR since, I don't know, you want to go back all year? Just kind of see what happened. Okay, here we go. So this is MSTR. Let me make this as large as possible. And if all we did is use momentum, if that's the only thing we did, would this have made money? All right, so let's start off. So we had a buy signal in February. That one ultimately stopped out for a gain of 150%. Okay, 150% on this move. And then we got a sell signal because momentum is no longer there. So why be in the stock if momentum is gone, right? Makes no sense. We got a sell signal and ultimately got stopped out. So that was a scratch trade. Then we got another sell signal, reaches its free trade target, gets stopped out, scratch trade. Another sell signal reaches its free trade target, gets stopped out, scratch trade. And when I say scratch trade, it's either like we made 2% or lost 2%, that kind of thing. Or in this case, maybe 5%, right? Because it's such a volatile stock. And then we got a buy signal at MSTR in September. And guess what? Momentum is still there. It's not yet stopped out. And so far, MSTR is up 182%. So 182%. So 182 plus 150, and all these were scratch trades. So 2 trades, 250, 332% of gains. 332% of gains. And literally all I did, and this is the stock, right? This is not even using options. I don't know why I can't type properly here. All right, 332% of gains since February in 1, 2, 3, 4, 5, 6, 7 trades. Imagine doing 7 trades since February, right? Most people do 7 trades in a week. This is 7 trades in one stock. Okay. Sabina was asking for MSTR. Perfect. Sabina, does that make sense? Do you have any questions on this? Any further questions? How about Zoom? Sure. Let's look at Zoom. All right. Yeah, no problem. No problem. I wasn't trying to call you out, Sabina. All good if you're on the phone, not a problem. All right, Zoom. Let's see here. I know we had a momentum buy signal, but I can't remember when that was. Okay, good. So let's just look at the past 2 trades in the interest of time. So we had a momentum sell signal. That one did not reach its profit target, its free trade target, and ultimately got stopped out for a loss of 4.6%. So let's write that down, minus 4.6%. Minus 4.6%. There you go. All right, and then we got a momentum buy signal, and this trade is still on. So far, the stock is up 38%. So 38 minus 4.6, let's call that 33% of gains. All right, does that make sense? Does anyone have any questions on this so far? Right, and what we do is we actually use profit targets. We have 2 set parameters. So let me quickly show you this. Let me show you this like on the SPY. So on the SPY or the QQQ, we use something called swing trading mode. Okay, so the swing trading mode automatically gives us that initial profit target where we want to get that free trade target. So as of today, like literally as of, I don't know, 20 minutes ago or something, or half an hour ago, the S&P momentum long trade that triggered on November 6th has now reached its free trade target, right? So now I'm going to reduce half the position, and now I'm going to be able to trail it with a trailing stop, which is typically going to be this this purple line. So, but for a day trade, and this is our day trade here, remember, we use something called the day trading mode. So all I do, and I can use this on TradingView, I can use it on Thinkorswim, it's or NinjaTrader, it's all the same. I go to day trading mode. So you see here, I'm in day trading mode, and when I'm in day trading mode, it changes the profit target and the stop losses to obviously closer, because day trading, you know, you can get less of a movement within one day than you would over the course of multiple weeks, typically speaking, right? So it's just, that's really what we're trying to do here. Make sense? How about Newmont Mining? Of course, let's look at Newmont Mining. That's a stock. All right, let's look at Newmont Mining on the daily chart. Let's see if this would have made any money. I actually don't even know. I haven't looked at this from a momentum perspective in a while. All right, so let's look at it all year. So if all I did is use momentum, if that's the only thing I did, is because again, remember, as a trader, what we want is momentum. That's what we need, is momentum. So we got a buy signal right there. So that buy signal made, again, reached free trade target and then got stopped out for a gain of 20%. So let's call that 20% right there. all right? And then the momentum stops. Got a sell signal, got stopped out, another one stopped out. Again, and I say stop, these are basically scratch trades. And then we got a buy signal, and this one worked. Reaches its initial free trade target, and that trade ultimately got stopped out for a gain of 20%. So that's 20% here. So that's 40%. And then we got a sell signal. So we got a sell signal. So this is what I'm saying, right? When I talk about momentum, momentum cuts both ways. And in next year, in 2025, I'm fully expecting a crazy ton of exactly this kind of stuff. Yes, we're going to get buy signals, but dear Lord, you know we're going to start to get sell signals. And so far, since that momentum sell signal, Newmont Mining is down 13%, meaning that's a gain that like we would have bought a put option or shorted the stock. So that's 14% or whatever we just said, 14%, 13, whatever. Let's go 14. So 20, 40, 40% and 10, that's 54%. Year to date, let's see. Year to date, Newmont Mining is, let's just see. That's interesting to know. There you go. I'll watch this. This is cool. So this is since February or whatever, since March, we did 3 trades. No, sorry, 1, 2, 3, 4, 5, 6 trades. 6 trades since February, and this is up 54%. The stock itself, Newmont Mining, year to date. No, let's go year to date. Year to date is here. Is up 4%. You guys see what I mean? If as a trader, unless you have momentum, there's no reason for you to be in a stock. It just doesn't. And when I say for you, I mean for me as a trader. That's my methodology. It makes no sense. As an investor, that's a very different picture, right? But as a trader, I only care about momentum as a directional trader. And of course, this is what directional means. Does that make sense? What about Disney? Sure, let's have a look at Disney. Is anyone here a day trader, by the way? I'm happy to look at this intraday as well, a bit more. I showed you the SPY, but you know, let's look at Disney. All year chart. All right. So this is a year-to-date chart in Disney. And for Disney, we had 1 signal, 2 signals, and 3 signals. It's very few signals in Disney. So year-to-date, 3 trades. Let's see if this would have made any money. All right. So first trade, again, reaches its profit target, then gets stopped out for a gain of 20%. So that's 20%. 20% is there. And again, this is not even buying a call option. This is just the stock. Then we had a sell signal. That one actually got stopped out. This is it reached its free target. And then we had a second chance entry. So what happens if it goes right back below those lines? We get back in. I will teach you guys this. And that one ultimately got stopped out for a gain of 13%. So that's 13%. And then we got a buy signal here in September. And so far, the stock is up 28%. So that's 28%. So 28 plus 20 plus 13. Let's call that 48 plus 10, 58. Let's call it 60% to be very conservative. What is Disney doing year to date? Disney year to date is up 30%. So Disney is up 30% year to date, and with 1, 2, 3 trades. Well, we had a second chance. It's called 4 trades. This is up 60+%. Does that make sense? Yes, sure. Let's look at some more intraday stuff. Absolutely. I want to make sure I give everyone all the questions you can get to. I'm going to make sure I get all this. Sure. So I showed you the SPY, right? Again, the market's about to close here in like 7 minutes, but let me just make sure I adjust the thing here. All right. What about Bitcoin? Sure. So with Bitcoin, we did have signals today. I can show you this quickly. Crap, where is it? Oh, actually, let me show you. The question is on IBIT, sorry. All right, on IBIT, we have day trading signals here. All right, so we had a buy signal on Wednesday. That one obviously reached its free trade target and ultimately got stopped out for a gain of 2%. It's just an intraday chart. And then we just got a sell signal like whatever, 20, 30 minutes ago, whatever. Again, maybe not the best, time to look at this stuff here. 3 minutes left to go on a Black Friday, but I think you kind of see what I mean. What about the Nasdaq 100 or the futures? Sure, I mean it's all the same, right? So whether I look at futures, empty field. There's a lot of empty field people in here. So this is the Nasdaq 100 signal this morning. You guys see that? Just I showed the SPY. This is a live chart again. Watch it ticking live. So we got a buy signal right there. It reaches its free trade target right there. So within, what is that, 15, 20 minutes up. And now we have a trailing stop. And so the purple line is our trailing stop. Make sense? Yep. All right. What about Walmart? Actually, retailers, sure. So let's look at Walmart since you're asking. I mean, retailers are moving today. So retailers, Walmart, it received a buy signal also out of the gate this morning, or no, like at 11:25 Eastern. So whatever, is it like an hour and a half ago, something like that? Received a buy signal. Then it reaches it. It has not yet reached its free trade target. But again, we've got what, like 5 minutes left in the week. So that's pretty. I mean, this to me is not good enough to take a trade, to take profits, right? And we have a trailing stop. Is this helpful, guys? Give me a quick yes if you can kind of see the reason why we would use something like this. Again, it's about momentum. Momentum is a very powerful thing, and I think unless there is momentum, I see very little reason to be in a stock, right? So let's look at Salesforce. I think someone was asking before Salesforce. So this is CRM, and CRM. Let's just look at the last two signals inches of time. We had a sell signal, a short signal. It reaches its free target, then gets stopped up for the rest. So it's a scratch trade, and then we got a new momentum buy signal, and that one is still valid. So far, CRM is up 24%. If I would have bought a call option, I'm probably up, I don't know, a few 100%, right? That kind of thing. So let's just, if you guys would like access to this, I'm gonna give you a Black Friday special here that I think is really unbelievable, quite frankly. But before we get to that, let me just quickly share with you a couple of words on all this. So what I've shared with you today is purely what is momentum, and hopefully I was able to make the case and share with you why I think we're going to have a momentum market this coming year. So I started this presentation by saying that I'm going to show you how I plan on trading this new momentum market. Hopefully I've been able to show this to you. And I think in order to survive this shift in the market, we need the right tool. And quite frankly, I think a lot of people, again, like I said before, don't have the right tool for momentum. A lot of people know how to buy a dip blindly, but that's not momentum. So I spent this past, 45 minutes or so showing you my plan, the exact tool that I'm using right now. I was hopefully able to show you, like literally trade that it today. So today I'm going to give you the opportunity to also have that same exact tools for the next 12 months for Black Friday, and we're going to knock off like 87% or 86.8, whatever it says here. So here's how to join. If you can see the power in this, and I hope you do, because I've hopefully been able to show you everything that I possibly can in a short amount of time here on Black Friday, get access to this right now. You're going to get 12 months access to the indicator, and also we send out trade alerts on SPY and QQQ and stuff like that. And it's only $199. That's 86.8% off here today. You go to steadytradersecrets.com/Friday. People are asking, of course, where do you install this on? I'll talk about this in just a minute. Grab it. You're not going to regret it. Next week, we have a very important member session on Thursday, the 5th of December. Please make sure you join. If you can't join it, do not worry. It'll be recorded. You'll get it. We do them every month, but please join it. You get full 1-year access to this indicator. It's just $199. Swing trading and day trading, stocks, ETFs, options, futures, all the stuff we just showed you. We also give you access to the 3 triple play strategy, which is an additional 3 strategies you're going to learn for short-term, swing, and long-term plans. Live monthly coaching sessions every month. We give you step-by-step tutorials and checklists as well. All this is included for an entire year if you go to steadytradesecrets.com/Friday. Where do you install this? Well, I'll show you this in just a minute. Next Thursday, as I said, December 5th, 11 a.m. Eastern, so that's New York time, 8 a.m. Pacific. I believe that's going to be 4 p.m. London time. Please join us. If you can't join, do not worry. It's recorded. It gets sent to you by email. It'll be on the member site as well. Here's where to install it. If you have any of the following, you can install this. Thinkorswim. So this is Schwab's Thinkorswim platform. I'm a big avid Thinkorswim user personally. I'm not advocating their platform, just saying I use it. MetaStock, TradingView, which is what I've shown you today, and NinjaTrader. Okay, if you have TradingView, and I think also NinjaTrader, we need typically a few hours to give you access once you've requested it. So don't freak out and go bananas if you don't have access in like 3 seconds. We will give you access, don't worry. It's not a problem. Trade alerts, yes. The trade alerts are always going to be on the underlying asset. So like, for example, we currently have an underlying trade on the SPY, but I'm going to teach you in the member session what the options trade is, right? So we have a very repeatable process for using options. I'm going to teach you that in the member session so you'll know exactly how to use the options trade for this. SteadyTraderSecrets.com/Friday. Go grab it. It's 86.8% off to be specific. A full year for just $199. Honestly, it's a hell of a deal. I can only encourage you to grab it as long as the offer is good here on Black Friday. I will teach you exactly what those moving averages are in the member sessions. That's part of why we have member sessions, so I can teach you those. They are being used both for entry signals and for trailing stop purposes. So like, for example, here on that signal I showed you a second ago on CRM, you can see we have a trailing stop. It's the purple line that we want to use. Or what did we look at? The SPY before on this signal? Like the SPY, if I would have used the trailing stop again, I mean, listen, we have now now the market actually just closed. So obviously we reached our free target here in the SPY. So if this would be a normal day today, and it's not, the market just closed, we would have now gotten stopped out on a trailing stop, no questions asked, right? But obviously we took our profits at the free target. Okay, awesome. Yeah, guys, I mean, if you don't have a tool for momentum trading, please consider this. You're gonna need it. So even if next year even if next year you are going to do momentum trading plus other types of trading, every trader, in my view, needs a momentum tool. Lots of people, again, are good at blindly buying dips. That's a dangerous strategy, but more in that maybe in the member session the next Thursday. But what you need is a momentum tool. Momentum is what's important. Just look at what I showed you before. What did we look at? Disney before, I think was one of the examples, right? Again, as a trader, unless there is momentum, as a trader, and I talk about being a trader, not as an investor, that's a different tool, that's a different discussion. But as a trader, unless there is momentum, I have no reason to be in the stock. It's wasting my time and my money. Look at Disney. 3 signals last year, that's all we had. Sorry, this year, 2024, I'm already in 25 mentally. But that's all we have is 3 trades. There's no reason to be in this stock unless there is momentum as a trader. If there's momentum long, we buy calls, we buy futures, whatever. If the momentum is short, we buy puts, short the stock, whatever, right? Same thing for futures and so on and so forth. Okay, does that make sense? Guys, give me a quick yes if this has been helpful for the past, whatever we did, like past 45 minutes. Give me a quick yes if this is making sense. If you could see the reason for using momentum as one of your tools. I'm telling you, if we have a momentum market next year, and I am extremely positive we will, we have a momentum market now. You're gonna need a tool or a process, a tool and a process, and what you're getting here is a tool and a process for momentum, right? So you go to steadytradersecrets.com /Friday. Go grab it. You can use PayPal as well if you want. And I think PayPal even allows you to finance that as far as I'm concerned. That's with them. That's not with us, of course. Otherwise, you can just use credit card. Okay. Any questions that I didn't address or didn't see? Yep. All right, very good. All right, Jeanette, listen, I'm going to pass it back to you. I think we've covered everything that I can possibly show in an allotted period here. You should be back on track time-wise as well.
Thank you so much, Serge. I appreciate you, and have a great evening and happy Thanksgiving.